Hi, and welcome back to Small Caps. My name is Jess Furtick, and today I have the absolute pleasure of welcoming Gino D'Anna, who is an Executive Director of Askari Metals. The ASX ticker code is AS2. Hi, Gino. Welcome to Small Caps.
Thank you, Jess. Thanks for hosting.
Gino, now this is your first interview with us on Small Caps. So just as a start, before we get into some of the exciting details about your latest acquisition news, I thought it would be a good idea for you to give our Small Caps audience just a brief overview of the company, its assets, and also maybe touching on your background as well.
No, absolutely. So Askari Metals, it's listed on ASX, as you said. Ticker code is AS2. We're an African-focused exploration company. So initially, we commenced our move into Africa predominantly investing in Namibia, and on the basis of some quite sort of advanced lithium, tin, tantalum projects that we had along strike of the Oist tin mine. And the reasons why, I suppose, Askari started its life and focused in Africa is really predominantly on the basis that we've got a good strategic opportunity to leverage our knowledge and our expertise based around the team that we've built in Africa as well. Now, we've been very focused on delivering what we believe is an exciting portfolio of projects. And we're very active in terms of evaluating and looking at new acquisitions and new opportunities that really complement our existing asset portfolio and also help to deliver shareholder returns as well.
Fantastic. Thanks, Gino. And just a little bit on your background as well.
Sure. So my background, I've been involved in the junior exploration space for over 15 years. I've worked across many parts of the world, Botswana, Namibia, Zambia, as well as extensively in Canada. And I've also spent, obviously being an Australian, spent a lot of time working in Australia, mostly in the gold fields as well. So my background is corporate finance. But I obviously have a very keen eye for what I believe is going to be marketable. And I look at projects and I look at opportunities, not from just a pure investment perspective, but I look at it from if I was putting in my own money, which I do most of the time as well, would I deliver an outcome? Would it deliver a result for us and for our company?
Fantastic, Gino. And now just on that, the company has just acquired Rift Valley Resources. Can you tell us a little bit more about how that was a strategic acquisition for the company, and a little bit about the assets that you've acquired through that acquisition?
Sure. So the Rift Valley Resources licenses, as you've mentioned, they're based in southern Ethiopia. So it's what we call the Arabian-Nubian gold belt. Huge greenstone belt that runs all the way up from Egypt, all the way through Saudi Arabia, down into Ethiopia and into Kenya as well. And it's a very prominent gold belt, very big deposits. It's a great district of projects has been identified more in the northern parts of the gold belt and less so around where we are in Ethiopia. But what we find very interesting, and this is more of the strategic sort of ambition behind the acquisition, is that the Arabian-Nubian Shield is the host of several multi-million ounce gold deposits. And these deposits are globally recognized, very well known, very high grade mining operations. So that was the real draw card for Askari. And what we identified from the early outset was that there was not a lot of modern exploration that had been undertaken in Ethiopia. And that's why you see this distinct sort of gap between the major deposits in say, Egypt and Saudi Arabia in comparison to Ethiopia. But just to put things into perspective as well, Ethiopia hosts the Dawe Kote project. It's a 17 million ounce deposit. Got Tulu Kapi, which is nearly 2 million ounces, Kermuk, which is another 3 million ounce project. These projects are very mature, very advanced assets. And so that was one of the things that really sort of drew Askari to believe that, okay, if these deposits are there on the major greenstone units, and we've got an opportunity to, of course, acquire projects in very close proximity to those areas, like Lega Dembi and Sakaro, for example, then the ability, the prospectivity, and the opportunity for Askari is significant. That's why we've sort of decided that even from a commodity point of view, obviously gold has had record high runs
Hmm.
in the past 12 months. That's something that we believe is going to continue, and these acquisitions give Askari quite a significant entry point into the ability to build this tier one gold portfolio that we're looking to deliver to our shareholders.
Thanks, Gino. And so interesting that you're sort of strategically staying in Africa as well, from Namibia and then acquiring in Ethiopia. So it'll be interesting to, yeah, I'll have a couple of questions later on the Ethiopian assets and operating over there. But first, I want to understand a little bit more about the deal structure. So you mentioned you're in corporate finance. So how is the deal structured? Can you tell us a little bit more about, what the benefits are for both companies?
Yeah, certainly. So the way that we've structured the transaction is, of course, given my background, and I agree, sort of from how a company looks at these project acquisition opportunities, it needs to be a blend of both parties taking on risk. So we've assembled the transaction structure to make sure the risk of the projects and deliverables of the projects is shared between both sides. So the project performs, of course, Askari and its shareholders definitely benefit from the exploration upside and the potential deliverables, but also then the vendor will share in that upside between sort of the existing equity that they receive as part of the upfront transaction, plus also the milestone shares that they receive upon delivering these outcomes. Now, it's a relatively low cost acquisition for the company. And again, we've structured it like that because we see an opportunity not just for Askari to deliver and build on these tier one gold portfolio in Ethiopia, but also to structure it in a manner that makes sure that it's not overly dilutive to our existing shareholders as well. We want to make sure that we deliver on results and on tangible exploration results, that we're able to get the share price up and get the market cap improved and increased. And that's how we're going to deliver an equity return to our shareholders. Of course, the vendors then also get to take part in the equity upside and the result of those exploration potential and the moves there as well. But we believe that sort of the way that's been structured is that both parties will share equally in the benefits there.
Yeah, fantastic, Gino. Now, you touched a little bit on sort of the exploration potential in Ethiopia, but what specifically makes the geology of this area so promising? And, what are the signs or geological markers that Askari will be looking for in its exploration efforts over there?
So the first thing is your location. You have to be on the right greenstone unit, and that Adola greenstone belt where our projects are located, that is a major trend. That demonstrates to us that we've got the right fertility, the right geology. The fact that we are in close proximity to, for example, Sakaro East and Sakaro West, which is our more northern project areas, they are along strike of Lega Dembi and the Sakaro mine. Now, why is that important? Because it shares the same geological uh, it shares the same geological sequences. Now, that's in terms of what we believe we're going to be able to achieve there, given that we've got the same geological characteristics on our ground, given that we are in close proximity to existing multi-million ounce deposits, demonstrates to us that, okay, whilst these assets may be an earlier stage, definitely early stage exploration from our perspective is going to deliver what we believe is going to be major exploration upside and massive potential. What we want to do is, of course, move these project areas through and focusing on those ones that are the higher priority assets, but move these projects through the early exploration phase and get into drilling as quickly as possible. Some of these areas, such as the Wayuboda project, which is down in the south, has been historically explored and it's next to Electro Minerals, who had a very significant joint venture with Centamin. Now, why is that important? Because again, lots of artisanal mining on our ground, lots of openings, so we can see the mineralization very clearly. The grade of what the artisanal miners have been mining is very high, and we've got an ability basically to go in there, trench along the artisanal mine sites, and then mobilize a drill rig very quickly. So there's good opportunities for us to look at what's been done historically with previous exploration, look at where the artisanal miners are focused as well, and the sort of mineralization that they're encountering, because it's not just clean gold, it's also copper as well. So it's gold copper potential. Um, and then picking up on what we can do by way of deploying modern exploration techniques. And that can be as simple as trenching along the face, as I said, getting good representation of the grade and width, and then identifying high confidence drill targets to mobilize drill rig to.
Yeah,
The
fantastic.
reason why these areas definitely make sense from a regional perspective as well is that from the way that we're interpreting it, it's one of the last underexplored mineral rich frontier belts. And we're not operating in an area where it's made up of several small deposits. We're operating in areas where their significant multi-million ounce deposits have been identified, as I said earlier. So the
Yeah.
ability for us to really execute on initially early stage exploration, but understanding that we're exploring in what I would call the land of giants, means that we're at a significant advantage. And that's what I also explained to our shareholders, that right now we've got this first mover opportunity where there's a gap certainly with the smaller exploration movers such as Askari going into these areas and I suppose pioneering new exploration in an area where it is heavily underexplored, and identifying deposits and projects that demonstrate the same characteristics as the multi-million ounce deposits that are nearby and along strike.
That's so interesting, Gino. And obviously you mentioned location being very important, lots of mines along strike, very mature sort of destination in terms of mining. But a first mover advantage in terms of exploration, is that from an ASX listed company explorer perspective or just explorers in general in the area?
Certainly both, to be honest with you, Jess. There's a gap within Ethiopia, and I think that the gap is really it's a result of civil unrest that was very prominent in Ethiopia 15 years ago. You've had multiple changes in government since then, and the mining code itself has been rewritten and I suppose westernized, if I can use that as a way of describing it. Now, what that means for a new entrant such as Askari is that because there is this gap between your multi-million ounce deposits and your new explorers and new exploration companies, be it ASX or otherwise, there's an opportunity to really consolidate some very advanced and mature exploration ground as well. So we certainly see this Rift Valley acquisition not as the be all end all for the company, but we see it as being the opportunity for the company to set up the main infrastructure that's required to be able to then go and advance our acquisition and our strategy to, as I said earlier, develop that tier one gold portfolio. We've seen there is interest and there is a lot of entry coming in from Canadian exploration companies, which I believe actually share the same, I suppose, mentalities as us ASX explorers, in that we identify areas that are heavily underexplored, that haven't seen that modern exploration that other areas have seen, such as Egypt, Saudi Arabia in particular as well. And it's a case of, okay, now with modern exploration, significant deposits have been identified. That is kind of the key to our strategy. It's about identifying those areas that have that geological characteristics that we're chasing, that share the same similarities to those multi-million ounce deposits, and identifying areas that, yes, they're along strike, yes, they're in close proximity, but they haven't been there's been no modern exploration, despite historical work demonstrating high grade occurrences, and despite the artisanal miners also being active in these areas as well.
Yeah, so interesting. And Gino, you mentioned, that there was civil unrest before, and now the government's just got a new mining code in there. Can you give our audience just a little bit of an understanding of what it's like to operate over there? What's the regulatory environment like? Is it, a fairly simple or seamless process to get sort of exploration approvals? Have you gone down that track yet? Can you give us a little bit of information on that?
Certainly. So the key to success in any overseas jurisdiction, of course, is making sure that you've got a solid in-country team and good representation. Now, the reason why we like the Rift Valley acquisition is because it comes with a very well-connected in-country exploration manager, senior geologist. He's very well connected at the ministry at all different levels. And it's very helpful having that kind of a connection because not only is he good in the field technically, but understanding that he is very well connected within the ministry and not just the ministry in Addis, but also the what I would call those regional governmental officers. Definitely helps from the perspective of then making sure that you've got the right permits and approvals in place. Now, from a permitting perspective, it's actually very simple, very similar, in fact, to Namibia, where we're also operating, in so much as once you've got your exploration permit, initially they have a longevity of 3 years. Then, of course, you continue to renew them for further periods of 3 years and then further periods of 1 year. So essentially, you've got 7 years before you have to make it a determination of, okay, do I have a project that I can then transition across to a mining license? So from that regulatory perspective, it's very simple and very secure. From the position of knowing that, okay, what do I need to do in order to drill on my project? Well, the answer there is if you've got your granted exploration license, you've got permission to conduct your exploration, you've got permission to drill. The key there is making sure that you've also got good community relations. And that's something that we do early on. It's something that we've learned and we've exercised a lot of, I suppose, intent in terms of how we deal with the community because we've done that so successfully in the past in Namibia as well.
Mm.
Understanding that from our perspective, Askari is a foreigner in these jurisdictions. We understand that the communities around us are key to us being able to get that social license to explore and mine, and that's definitely where our initial focuses are then placed, and it runs seamlessly hand in hand with what we're doing from an exploration perspective as well.
Yeah, and it certainly helps that you've had that sort of in country in terms of being in Africa, operating in Africa, that experience previously. You mentioned Namibia and Zambia and a couple of other countries. That community engagement piece is so important, and also having those key contacts in Africa to the Ministry of Mines and things like that. So that's certainly very encouraging for investors to know. Now, you spoke about, getting on the ground with exploration. What's next for Askari? When can we expect to see exploration? What sort of exploration will the company be doing? And when can we start to see some results?
Yeah, so I mean, the company we've just recently closed a capital raise. We raised $750,000. So some of that money is going to definitely be put into exploration, early exploration on these project areas. And we're going to prioritize the areas that we go and focus on. As I mentioned earlier in the interview, trenching at the Woyuboda project is a high priority for the company, but then also doing lines of soil sampling and auger drilling up at the Sakaro West and Sakaro East licenses, which run alongside of Lega Dembi mine and the Sakaro mine. Those areas, they'll get early stage exploration. Trenching will be more mature work at Woyuboda, but that's the initial exploration work the company's going to be conducting. As I mentioned earlier, these types of programs are geared towards getting us up the curve as quickly as possible so that we can actually mobilize a drill rig in the shortest time frame as well. Now, running parallel with that, and this goes back to what I was saying earlier around the first mover advantage and the gap between major multi-million ounce deposits and new exploration means that there's very mature advanced projects that are currently being reviewed by the company for acquisition as well. So that's another kind of facet that the company's focused on. And as I mentioned earlier in the piece, and as is reflected through the presentation the company's lodged on the ASX, we are working ourselves to be this highly disciplined explorer, African focused. And part of that strategy is, of course, building this tier one gold portfolio in Ethiopia as well. So, as I mentioned, the idea behind the acquisition and the entry point for Askari going into Ethiopia through the initial acquisition of those Rift Valley projects is the beginning of what we believe is a much bigger picture, a much bigger opportunity for us.
Yeah, so interesting, Gino. So you've got sort of this dual strategy of exploration, discovery, and also acquisition in Africa. And you mentioned
Correct.
this first mover advantage. How do you think that Askari stands out from other companies that could potentially come into Ethiopia, given there are such big gold discoveries there and mines already existing in such a, hot gold market at the moment?
So the first advantage that we've got is that we've built an African team. We've already built our African exploration team, and that's been progressively done over the last 2 years. As I indicated earlier, our operations in Namibia, focused on tin, tantalum, and lithium, has given us a very strong building block for an African-focused exploration company. And that same team that we've got in Namibia can be actively deployed into Ethiopia as well. The fact that through the acquisition of Rift Valley, we've been able to sort of inherit, I could say, a very strong in-country exploration manager, and who is, as I said, very well connected at local and federal government levels, as well as within the Mining Commission, gives us that strategic advantage that I'm talking about, gives us that first mover advantage. We don't need to worry about going in and setting up infrastructure from the very beginning. We've done it already. Cliff Fitzhenry, who's our Chief Exploration Project Manager, he's worked extensively within Ethiopia on gold projects, as well as up in Saudi Arabia on the same Arabian-Nubian shield. So he's very competent, understands the style of mineralization and the deposit types as well, and very much is our competent kind of individual from where do we go from an exploration perspective, how do we rank and prioritize our project areas, but also where do we focus our time and our project evaluation budget in acquiring new projects as well.
Yeah.
We've got the ability through these mechanisms to really deliver something fantastic for our shareholders.
Yeah, fantastic, Gino. Having the right team and the right project, I mean, especially when you're operating in Africa, is so important. Now, I just have one more question for you, Gino, before we run out of time. And that is just to provide our audience with, 2 or 3, key investment highlights, if you would, as to why they should have Askari on their stock watch list. You've already mentioned the first mover advantage, but just a brief sort of rundown.
Sure. So I suppose to answer your question, running parallel with what we're doing in Ethiopia is still the activity on the ground in Namibia as well. Now, we see that Namibia, our OIS project, as I mentioned before, that's the one that is along strike of the OIS tin mine, that's owned by, it's actually operating still today, and it's owned by Andrada Mining, a London-listed company. Now, OIS for us is a polymetallic opportunity. There's definite high-grade tin and tantalum mineralization, and there's also lithium mineralization in those pegmatites as well. We've been working through the historic database and reinterpreting a lot of the exploration results and focused on understanding that tin mineralization and the tantalum mineralization a lot better. A lot of the focus in the past hasn't been centered on tin and tantalum. It's been very much focused on the rare metal pegmatites and principally lithium. But we believe that that has left a massive gap in terms of the real opportunity, the real upside of that project area as well. So that's something that investors have to look forward to, that continued work stream there along our 600 square kilometers of tenure running along strike, as I mentioned, of that OIS tin mine, both to the north and to the south. What the company's also doing, and we've had these assay results sitting in a laboratory. Now we're getting access to those results. Again, that's part of our reinterpretation, and part of that is the focus on the tin tantalum as well. That's going to help us to gear up and get into drilling out the pegmatites from a tin tantalum perspective as well. So that's another stream of work and another stream of information that shareholders and investors have to look forward to. Now, running concurrently with that, of course, and this is the I suppose the excitement factor for our company is what we're doing in in Ethiopia, what we've already done in Ethiopia through the acquisition of Rift Valley, leading into our initial exploration work. Again, as I mentioned, trenching at Wayuboda, soil and auger work up at the Sakaro East and West projects as well, but also the whole aspect of growing through acquisition. As I mentioned, there's a lot of very advanced, mature projects in Ethiopia that are currently being reviewed by the company. And because there is this gap, as I mentioned, between multi-million ounce deposits and the junior exploration end, these projects can be acquired with very attractive terms for the company as well. The government, I should mention, the government in Ethiopia is very mining friendly. They are looking to attract investment from foreign Western companies that are looking to deploy monies into exploration in this area because they see that link between exploration to mining to them being able to say, okay, how about now understanding that mining can be a very important part of the country's economic relationships as well.
Yeah, so interesting. Thank you so much, Gino. So basically, in a nutshell, continued work streams across Namibia, a new acquisition in Ethiopia, and acquisition potential moving forward and growth, and also potentially growing, developing sort of jurisdiction in terms of Ethiopia in particular, having that first mover advantage in a mining friendly jurisdiction. So very exciting times for Askari. I really look forward to having you back on the show, Gino, to talk about some of those work streams and updates over there. But in the meantime, thank you so much for joining us and really look forward to you coming back on the show.
Perfect. No, thanks very much, Jess, and I really appreciate your time as well.